Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Friday, November the 26th, the year's 2021. Let's talk trading. It's time for the weekly wrap up. As always, these videos are for educational purposes only. Your results may differ from mine. First, I hope everybody had a nice turkey day yesterday if you celebrate Thanksgiving. And hope you didn't eat too much turkey. Okay, on to the pound for the week. All the gaps have filled here across all pairs. You can see the pound is about 50 pips off the current weekly low at the time. And we're 117 pips below the weekly open and 121 off the weekly high at the moment. You can see here on the daily chart, yesterday's candle was almost a doji. And right now, today's candle's green, but we are outside, we are below the opening range of the week by 54 pips. 313 below the weekly open, 353 below the monthly open. You can see we just hit that yearly open and just crashed right through it. And today we put in the yearly low at 32.77. Some inside bar action across the pairs, the pound not being one of them. We are outside the weekly and monthly inside bars that were put in last week and last month, respectively. For the day, lots of pairs over 100 pips, the pound not being one of them. You can see here the dollar yen definitely crashed today. Obviously, there must have been some news, but somebody, in fact, I was looking at that. I think it was sometime yesterday. I saw it peaked around 115 and already dropped. I was thinking that could have been a nice trade, but I didn't take that trade. I'm just wondering why the action must have been something good with the yen. I haven't checked the news. It's a little earlier than normal. I've got some errands to run today. That's why the video's coming to you a little bit earlier than usual. But yeah, that dollar yen really really tanked there. And you can see here we've crisscrossed across the open here at 33.21 on the pound today. Coming out of the rat zone. So red rats get some G's. We took out the pivot. We actually hit S2. Bias around S1 was long. That trade would have paid off. It's like we hit S2 exactly. We haven't hit the pivot for the week yet. Doesn't look like we're going to either. We've got 3 missed pivots this month so far, with 2 of them happening this week. We've got a missed pivot this month on the weekly, and we have a weekly missed pivot for last month too. These 2. Monthly, no missed pivots. Yesterday's daily was almost a doji, about a 2 pip body there, almost 3. So you can see a lot of wick zone action today. And the weekly range is only 172 pips, 50 percentile, dead center. High minus the previous high, negative 64, meaning we didn't break it, but the low 118, so taking the low break of the week would have paid off nicely, especially considering it's bounced 48 pips. So you had that's what 166 pip potential. So the buy zone type traders, high minus close, buy zone traders, high minus the open was only 4 pips, so it didn't go up, but open minus low was 167. Rat traders off the weekly high, 120, 119 pips at the moment. And off the rat traders off the weekly low, 52. So once again, if you take those statistical type trades and put your stop loss in place, there's usually a chance to make a profit. But remember, these videos are for educational purposes only. Your results may differ from mine. Simple price action chart. You can see the break at the 30 line, the Wall Mall 30 line this hour paid off, just as did the break of the 40. Put a couple pips in your pocket each time. We had a high of 45 and a low of 23. So that would have been 5 to the upside possible and 7 to the downside possible. But as you can see, better take those pips before the market takes them right back. And as we like to say, if you look left here, come down to this low area, you can see this area resistance here turned into a support level there. And if you just look between these lines, price moved up from there, tried to move up there. So this time it moved up. And we actually got into the launch pad twice, the area between 40 and 50. I like to call it a launch pad. But price failed to rocket upwards the last two, or this hour and the previous hour. You can see the ranges over the last 5 hours clocking in between 19 and 22, which is ample to make pips using the Wall Mall method or just trading these horizontal lines. But you don't see any 30s and 40s. So what that means is to take your, 2 to 5 pips when you can before the market snaps back on you. And we're almost at the top of the hour, so we should be able to get to see some interesting price action in a couple of minutes. See, I believe I have something. Nope, that's not turned off. What do we have? We've got the lower high right there with, you saw price just moved across it. Looking left, you see you have all these lower wicks. So there's a possibility to take that trade. But as you see, it snapped right back the other way. We like to say look left. And then also using the multimeters, looking at all this red here, you might not want to try to swim upstream, especially the last few minutes of the hour. Things can get pretty hectic. And the last one ball was up at the top, so you can see here the indicator saying short bias. And one thing that I've learned, even though I like to scalp using the 1 minute charts, the 5 minute charts, I know not to trade against certain candle colors. So I like to look at these two charts, have these displayed, but the 15 to 30 and the H1, if they're all the same, I don't like to try and swim against them. It just usually doesn't pay out. So, and all you have to do is if you just move up, say, look at the H1, and in this case, if you see what the last ball was, then you see here, so in this case, you had a red or bearish candle, black on my screen, but it kept pushing down. And then just wait for the one ball, and then wait for a test, and then you see what happens. So here, you've got a two ball, you had a test, and then see what happens. And you could take the break of the open. In this case, this could have been a holo open, H1. And then you just pretty much go with the flow. Or if you break it down to M30, you can see once again, these candles, it's making lower highs, lower lows, pure price action. It's, the market's telling you something, and you just have to read it. It's, instead of words, we have candles or bars or lines, depending on what type of chart you like to use. But you have to read it and then trade accordingly. It's really not that difficult. And sometimes the simplest things can be profitable. If you look at the daily chart and you just put up, there's yesterday's close and low. And if you just, whoops, how did I accidentally hit something. So right here, you have yesterday's open and close, and you could just trade right across that. Once again, a very small body. Just trade with what you see. And then if you had put a line there, price went down, crossed below it, take pips, came back the other way. Just plotting just a couple of horizontal lines on your chart and just sitting back and waiting and taking your trades accordingly. I mean, sometimes you can think about it. Let's say you can only take one trade a day. Then you have to wait for your best possible setup. So there's no reason, though, to not take your best possible setups. There can be a million setups, but if you look at your trading performance and look at your wins and just see what they have in common and do that, and then you can look at your losses and see what they have in common, especially, look at the entries. And then you could say, okay, if you see something that's just really wrong, then you can just say, don't do that. And that's one of the reasons why I make a lot of indicators, because I've been doing this for, a few decades, but every now and then I'll see something new, learn something new, and figure out something new. And so that's why I keep making these indicators. But on most of my charts, you only see a handful of indicators, and most of them are gauges. So, fellow traders, that's it for this week. Hope you had a profitable week and a fun and safe holiday if you partook of it. And I hope you have a fun and safe weekend coming up. But always remember and never forget, when you're at your trading terminal, at your trading platform, it's not what you trade, it's how you trade it. So go out there and train the banks. This is TheRumpledOne, over and out.